Wow, YouTube was slow again today. I've rebooted everything. Router PC still was slow. How you doing? Good morning. Welcome to Forex.Today. Gotta get that BOE going. Hang on. Wait, are they not streaming their press conference? Weird. Really? It's not on their YouTube channel. Maybe I'm wrong. Maybe there wasn't a press conference on this one. There was in February. Weirdo. Weird. Really? It's just hard to believe. Interesting. All right, my bad. Well then, good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Why, you ask? Oh, well, that's a great question. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne, good to see you. I'm a master trader. Master. Yeah. Cool, I got this like 15 years ago. Thank you, Traders Way. Or Traders Accounting. Yeah, they were my old accounting firm. Golly, I'm out, man. I'm out. But anyways, good morning. Great. Huh? The world's great. Lots of interesting things going on. Bank of England not doing nothing. But the thing is, are they going to pull cuts forward? The Fed is, well, looking through inflation. Swiss National Bank, cut. Huh. Wowzer, what an interesting world we live in. Good thing we're foreign exchange traders. So I recommend that we go through gold, oil, and Bitcoin as well. What do you stink? Smell like a plan? Very cool. Very cool. So Bank of England, yeah, there we is, and there we shall be. Huh? Let's, don't have this up right now. I want to go to my scalping tool, the scalper. And it came out as expected, so you can see it updated. It got rid of the possibility if they raised or cut. So it deleted everything that you don't need. It's all dynamic. It does it very quickly. And it's looking at, looks like a lot of things are down. Very interesting. Pig, right? The pig over 48 hours tends to be down. So there could be a day trade down, huh? We can draw the following conclusions about the expected movement on pound dollar based on the last 12 Bank of England interest rate decision events in the United Kingdom. 80% chance that in the 48 hours the trend is down since the actual is as expected. And you click that and it opens up all the charts that show down. I mean, it's gorgeous. Right, it's gorgeous. Shut the back door! Yeah, I know, it's gorgeous, right? You show this to a trader, and they get tingly. So if you get tingly, I do. Anyway, so going back to the scalper tool, that just happened. You can follow up with all that. Okay. Cool. 10 minutes ago. See how that's live? Anyways, cool. So funny the site thinks I'm logged in as a database person. But anyways, most recent trade was identified 26 minutes ago. So the market's a bit slow right now as we're getting the day going. I'm watching Bitcoin. What about you guys? I guess I should ask. Okay, so let me ask you, out of commodities, let's do, that's a wrong one I clicked. I need the poll. Where's the poll? All right, what commodity to cover today? Gold, oil, Bitcoin. Oops. And if you had to choose one, what would it be? Don't worry, you don't have to write an essay and you don't have to answer why. While you're doing that, let me thank the members of the Council of Investment Advisors. We had a meeting from 10 o'clock to 5 o'clock yesterday, and it was extraordinarily rewarding. I want to thank the members of the CIA. What a cool day. What amazing questions. What amazing dialogue and conversation. And we deployed, I think there was 8,600, and they decided to deploy 8,500. And so now, so we increased the portfolio by 13%. So thank you, CIA. We are fully deployed, and cool. I'm looking forward to it. We had some tough decisions. It was difficult, the discussion of rotation and and allocation, because the market was unusually up, when you look at seasonality in quant box, what's occurred over the last 3 months is unusual. So we got, so we're in that unusual spot of, normally you're not at prices like this, but we just watched the Fed meeting and we read the summary of economic projections and we discussed the meaning of it. And then we came to our conclusions and then we're like, well, we feel uncomfortable at the price, but the rationale behind the market, well, gives us the courage to invest. So we did, which is cool. And the fun thing about the CIA is after discussing for hours our different investment opportunities and performance and all that kind of stuff, and then we discuss the Fed policy and the Fed projections, and then we discuss what we think is going to happen. Then we get down to brass tacks and we debate. What about this asset class? What about that? Do we have too much in this? Should we move money out of that and into this other thing? And then what about the other capital? What should we do? What if we're sitting on cash? What's the next thing we want to add? What are these other opportunities? And we have these conversations, and finally we make decisions. And the council really does make decisions. How much of this? What do you guys think? And once we get down to a vote, I open my my investing account, my pension fund. I open up the pension fund. People can see me do it. We log in and I buy the asset right in front of everybody. And then we decide, okay, well, what about these other things? Okay, and then we discuss that for another half an hour. We finally get to a second investment. Well, how much do we want to put in that investment of the cash? And do we want to move cash from old investments into this, which is called rotation? And we debate that, and we finally say, no, we want to buy this much of that asset. Great. Log into the pension fund, make the purchase, do it in front of everybody, deploy the cash. Everybody sees everything. It's fully transparent. And it gets done. And I'm telling you, from my perspective, it's I don't know. It's hard to describe. Incredible, extraordinary, rewarding, fulfilling. So, anyways, thank you to the members of the CIA for that. All right, come on. I need a couple more votes. What commodity do you... I need 30 votes. Come on. Give me 30 votes. I need to know what you want me to cover, and I'll cover that. Okay, we got them. Thank you very much for your participation. I appreciate you. And you want to do gold. Very little on Bitcoin. Interesting. Some on oil. Okay. All right. Moderately bullish on gold. Great. Let's go to the Goldie XAU. And we've already hit my target from bajillion years ago. So now that, I hope you were interested in this before the move. Let me just make that point. If you're interested in it now because it has already moved, you're slow. You're late. Hang on, I rebooted my machine. So I know I have to do this thing to my drawing tool and task. My drawing tool, for some reason, starts with 3 iterations. It's built into it. So I had to cancel them. All right. So I got this. Okay, we'll move it over there. So here's my trade plan from, I don't know, a week ago. Okay. And so that point is like, if you're interested in it now because it moved, you are late. You're responding to this only technically, let's say. Only technically. And yeah, you're and then the vol, you probably missed most of this. So now what? Well, I suppose you're going to try for something like that, huh? Okay. But being late, let me tell you, this is the day that I became bullish on gold. I'll delete this. Okay. This is the day I became bullish on gold. How did I make that decision? Well, I looked at the S&P 500. I looked at VIX. Okay. I looked at the yield on the 10-year T-note. What else did I look at? I looked at the yen. I looked at the dollar. Okay. 1, 2, 3, 4, 5. Okay. Then that's part of this. Okay. And then we looked at the US econ. So US econ. And we looked at technical trend. Okay, so I put all of this together, and on that day, I became bullish. Is that what you guys do? Yeah, moving around is difficult on one's life, huh? Yeah, glad you found your spot on Earth. Yeah. So, is that the type of preparation you do for a trade? Or do you say, oh my God, it popped, I guess I should buy it now? Which one do you guys do, honestly? Okay. Now, this one down here takes a lot of work, but I have mine automated, so it doesn't take me any personal effort, but all this level of research gets done. Okay. I didn't even put in the commitment of traders report, but that would show you capital flows and capital stock. And on that day, very precise. And if you had that kind of analysis, you have been in this for weeks now, and then an amateur trader is now only interested in it now because it's popped. Now? Dude, it's been up for 3 weeks. Where were you 3 weeks ago, right? And I'm playing on your emotions for a reason, because you should get mad. You should get mad. Why are you in so late? Your process, okay, is weak. You shouldn't be mad at me for saying it. If you're getting emotions, you're like, damn, how dare he say that? What an arrogant prick. Well, dude, if you're only interested in it now, you should be upset at yourself. Okay, so don't get mad at me. So, okay, yes, maybe this continues. And if you've analyzed what the Fed said, They're not worried about inflation. They're going to see through it. They're going to look through inflation. So you could come to the conclusion, okay, that inflation may remain for a while because the Fed's not going to do anything about it. They're not going to raise interest rates. Okay, so if inflation's going to stick around, okay, then you could be in the business of buying a dip. And then you should also have a kill switch. How far does it need to fall before you're no longer bullish? And that line is, I guess we'll put it like here. Okay. So right now we're riding the mean. Where would you put the mean? Huh? Where would you put the mean? Delete. Okay. And by the way, I'm trying to get your emotions to kick in, not because I'm trying to be rude or arrogant or insulting. I'm trying to get you to make a change, an emotional change, a mental change, a physical change. Once again, if you're only getting interested in gold now, you're way late. And I want you to say you're going to address that issue. You like to trade gold, but now we're way up here, one standard deviation above the mean. We were one standard deviation below the mean. And now if you only became interested now, it's so late. It's so overbought. One standard deviation above the mean, which has been sloping since the end of January. And now you're interested, right? Okay. No, not good. Not good. Not good. Another way to look at it, let's say you don't like channels. Okay. And this is not your typical channel. Remember, it's drawing the bottom and the top, not based on, like when you do a technical channel, you're going to like try to connect some of these things and you get shape. No, it's measuring linear regression and standard deviation combined. That's why I call it price action pivot points. So you might be drawing channels and stuff a little bit differently. But like, let's say you use moving averages. Okay, this moving average turned bullish. And you're like, yeah, well, it crossed over multiple times. Okay, yeah, I get that. We were range bound for a long time. Why? No inflation. Don't just trade these things like they're colors on a chart. Okay, this is Forex. This is not Fortnite. This is not a video game. You actually have to think. There's no inflation. So in this time period, I'm like, why would you trade gold? What are you, a knucklehead? What are you, a ninkau poop? And I would ask people down here, like back in this period, I'm like, what do you guys want to trade? Gold. Or people would come in like, what do you think about gold? I'm like, I don't think anything about gold. Why would you want to buy gold? Why aren't you buying the 10-year T-note? That's what I was doing back then. I'm like, dude, you can pick up 5% on a 10-year T-note. You want to buy gold? There's no inflation. What's wrong with you? Jiminy Cricket. Okay? You guys remember, right? Right? And then what? And then one day, everything changed. We started to get inflation. You know what this is? CPI. The world changed because the United States had an uptick in inflation, not disinflation. This is disinflation, and this is inflation going up. And it's still going up. And as long as that happens, I'm probably a buyer. But right now, I'm only a moderately bullish. Why? Because of all those assets and all those, all the correlation that I just outlined. There was about 9 things. From COT to VIX. to S&P 500 to Treasury yields. And I'm only just moderately bullish, which is probably good enough for now. Okay, where do I get that information? Boo. Anybody know? Lovely, with your smile so worn and your teeth so green. Baby, you smell like Vaseline, but I like the way you look tonight. All right, here we go. Boom. 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 Let me do a deep dive research into about 9 different assets. It's still loading. Come on, Google. 9 different assets, correlate them all, include some seasonality, include the commitment of traders report, look at the economy, look at treasury yields, look at the stock market. Let me get all that information for you and make an informed decision. Moderately bullish on gold. That goes back a month. You're like, but Wayne, you said something about February. Yeah, I think I can go back. Let me move that out of the way. I think I can go back a bit. There we go. Boo, 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 boo. Right in here. There it is. That's where the vertical line was. And that's where we are now. So it's come up. It's come down. Look at QuantBox was cooling off as it was coming down. And so the question is, are we going to build from a 2 to a 3 to a 5? We'll see. We'll see, baby. Oh, it's so good. You know you want it. QuantBox.co. Okay. Yeah. Have you guys tried traders yet? You know who looked at it yesterday? The Financial Times. Oh, you didn't hear it from me. Just a rumor. But they looked at it and they're like, oh, whoa, AI? Oh. Yeah. Yep. Darko's out building his empire. Okay, cool. All right, stock market going up. Oh, yeah. Some of that green on the screen is my pension fund. Once again, thank you to the CIA. Thank you for your thoughtful consideration. Roderick's got the email subscription. Cool. But you think it'll upgrade because it's awesome? Yeah. I mean, that's why I really created it, right? Like, I think once you spend for those that are like, I just want to check it out. Like, some people are like, I just want to check it out. I want to kick the tires. I want to take it for a test drive. I don't want to buy the thing now, but I'm interested. And so you pay the $19, and after about 2 days, if you use it right. If you get the email and then you go to your charts and you start checking it out, and you're like, okay, well, let me take the trade plan. The trade ours is done, and let me like plot it out on my chart. And then, and some of these trades, you look at it, and you're like, oh snap. Now you won't agree with all of them. I don't agree with all of them, but some of them, like when I do what I'm talking about, I take the trader's idea and then I plot it on my chart using my tools, and I see how I read my tools, but I put in its thought. I'm like, ooh, like that's like perfectly aligned. And that's what it's all about. I really need to put together like a presentation to really get across my philosophy behind the technology, because I'm worried that people will just use it in a dumb way, right? And get nothing for it or make bad decisions because they're not using it properly. They're like, oh, this is an alert service. No, it's not. No, it's not. It'll think for me. No, it won't. It does technical analysis for you. There's a big difference. It doesn't think for you. And even then, why would you want that? Why would you want something like that? Anyways. Look at this, the old discussion. You guys remember this? I'll do it in blue, but do you remember when I did this? Where's my drawing tool? There it is. Remember I said, look, there's price. Oh, I guess that's not blue. I'll do it here. I said there's a place where we might be interested in selling. Here's a place where we might be interested in selling. And here's a place we might be interested in selling if you were a bear. You guys remember that? And then you drop into a 5-minute. Okay. And plan A, did it work? No. Plan B, did it work? No. I watched this on a 5-minute chart, waiting for it to turn bearish. Never did. Did it turn here? Eventually it did. Eventually it did. And then pachow. It's like that's an intraday trade. That's a London Open scalp. It almost got you to target. Not quite. Obviously, the weekly superseded the daily. So, here's weekly, which was our bottom. And here's our daily, the conservative target. So, not quite. And then do you think it had something to do with the Fed meeting? Well, of course, bro. So a little intraday scalp. It got you about 90% of the daily target. And then we had this massive, oh my God, the Fed's going to let inflation run hot. The stock market's going to go up. They're still going to cut. They're going to cut 3. It's 3, which weakens the dollar. Okay. And then, ooh, what a London Open, huh? Brutal. Somebody's pushing amateurs around. Brutal. Okay. Roderick says, maybe I need to do a daily thing on traders. I don't know. Look, they're charts. If you don't know technical analysis, join Investor Bootcamp. At some point, I'm running out of time. I'm running out of time, man. I'm running out of time. I'm trying to help as much as I can, but I got other things I need to do too. Right? I'm managing my empire. Oh my God. Yeah. But I will do a basic one to explain what it is and how to use it and stuff. I don't want a daily. I'm not saying no, but I'm probably not going to do it. But I'll give you a definite maybe. Now, for those that subscribe to the trade, well, if you up, I think there's two things. Let me find my email. For those that did the QuantBox AI alerts, I believe you got alerts last night that would be a text mail. So you got a couple of fundamental alerts for if you had subscribed to the QuantBox AI alert service, which is that $200 upgrade, one-time fee or annual fee. Then if you subscribe to TradeRs and upgraded your Plus account to include email alerts, you got those as well. So you might have gotten a lot of emails from me last night because there's a lot going on due to the Fed meeting. Can anybody concur that these came out? Let me check. Well, here's the TradeRs daily email. So that's not the one I'm talking about. I'll go back. I'm looking for a correlated. Here's QuantBox market open 2 hours ago. So there's that for score flips. But that's not what I'm talking about. Then there's oh yeah. All right. So your TradeRs subscribers that upgraded their account. You got several last night. I'm going to have to pop these. Okay. And for example, like this pound Aussie is okay. You were alerted to this. This is part of that upgrade, the $19 a month upgrade. Okay. It looked at a 4-hour chart, a 1-hour chart, and another 4-hour chart, analyzing. So one's a channel and one's a flag, kind of similar, kind of different, but whatever, they're different patterns. And it saw multiple reasons for pound Aussie to fall, not just one, but multiple. Okay, it gave you the pips, and you can see it was sort of like an intraday trade. A big scalp, a small. Yeah, I mean, it's 26 pips. But it looked at multiple time frames and says, hey, there's a little opportunity right now for selling pound Aussie. And so you got that email to you. Looks like, right? And then what else? Yeah, well, it's finding multiple. Right? So that's going on. That's cool, right? But a few of these came out. For example, there was another one, another pound trade. Okay, yesterday for a 41 pip move, 71.86% chance based on hourly chart, 4-hour chart, and another kind of move up to the resistance line on the hourly. So a trade back to resistance, break of a down channel on multiple time frames. So the bigger channel and the smaller channel. And it saw all three at the same time, sent you an email immediately. Very cool. So lots of AI working for you tirelessly, day and night, night and day. Super cool, right? So, yeah. Yeah. Yeah, well, like I said, Denise, it's not smart It just does technical analysis, right? Recalculated time says, how would your broker know you're using an AI service? You would become more consistent and they'd be losing money on you. See, it's not that you're using AI. It's not like a casino where they kick you out because you're counting cards. And you're like, I'm not counting cards. And they're like, well, you're making a lot of money. We think you're counting cards, right? In this case, it's not that you're like illegally using AI. And they're like, you can't use AI. And I'm like, I'm not using AI. And you're like, we think you're using AI. I might be, but maybe I'm not. Like it's not that. It's that most brokers make money on you when you lose. So every time you lose $100, your broker keeps it. So you choose a broker. Here's how it works, right? You choose a broker because they advertise to you that they're the cheapest. We have no spread. We have 0.1 spread on the euro dollar. You're like, ooh, cheap. You know that's a dumb idea, right? You really like cheap. I hate cheap. You know what I like? Value. But whatever. So that's typical. We're the cheapest broker. We're the cheapest broker. Okay, great. So you go there and you're paying them almost no money because the spread is almost zero. Okay, riddle me this. Put your business person hat on, okay? For a broker that doesn't charge you any money, how do they make money? How do they pay for their rent? How do they pay for their taxes? How do they pay for their employees? How do they pay for compliance? How do they pay the owner's profit? How do they pay, $10,000 a month for, or it's probably even more, $25,000 a month for TradingView apps, or another $25,000 for MT4, MT5 servers? Like, how do they pay all of this overhead? Let's say the broker needs $1 million a month just to pay its bills, pay for its customer service. Like, dude, $1 million is not a lot. But they don't charge any spread or very, very low spread. Tell me, how do they pay for all of this if they don't have any income? Because they 100% expect you to blow up your trading account because they treat you like a fool. And they're like, this loser is going to blow up his trading account with $5,000. So guess what? They keep the $5,000. So what if a trader just comes out of the blue, walks out of the forest, walks out of the mist, shows up and starts making money on their platform? Well, hell's bells. Now they're going to lose because now they got to pay you because they're not set up to actually enter trades into an interbanking system. They're set up to match trader A with trader B, but they know trader A is going to blow up his account in overtime, and they know trader B is going to blow up their trading account over time, so there's nothing really going on. But if you just show up out of the mist like a magic man, like a wizard of the markets, and you start being profitable, they're like, dude, we're losing money on this trader. And all of a sudden they're like, we decided, I don't know, boom. It rarely happens. They know 95% of people lose money, right? So they're like, pfft. Okay, so they just get rid of that one out of out of 100, right? And they just get rid of them. You go to Trader's Way. Every time you make a trade, there's a small fee. That's how ECN works. Like a small commission. It's tiny, but it's the same as a spread. Okay, great. But the only the only way they can make money is that, they would like, two things. Think of it from their point of view. They would like a lot of customers, and they would like them to trade a lot. It makes sense, right? Like, I'm not saying they've communicated this, but if you were running a broker, they're like, how do we get more clients? And we would like to provide our service a lot to them. Remember, if you don't trade, then they're not providing a service. So they're like, well, what's the best business model for Trader's Way? Well, how about if a customer opened an account, funded it, traded it profitably, and stayed a happy, profitable customer or client for years and years and years? And we can just slowly add more and more clients. And because our clients are happy, they never leave. And because they're profitable, they keep trading, and their trading account grows, so their lot size gets larger. And what they're doing is, you're happy and successful, and they're happy and successful. Oh my God. So if you're using like traders, they're like, all right, well, it's cool. If it works and if it helps, great. Right? I mean, I showed it to them. They're like, cool. Okay. So you need an ECN. I think. If you don't need, maybe you don't need it today, but you may need it someday, or you should be ready. Be ready, right? Okay. So anyways, yeah, recalculate time. Gotcha. All right, so what else is going on in the world today? Yens are doing all right. Let's get off dollar, because you've probably been zeroed in on that a lot. One of the best performing stock markets in the world right now is the Japanese stock market, and it's continued up. Here's the trade I made the other day at 98. We're at 100, so now I'm up 200 pips. And we're looking at yet another move here. We've hit target, though. So you notice that if you were swing trading this, you have permission to take profit. And, well, you would have done it already. I mean, once again, if you're only doing it now, you're slow in your decision-making process. If you didn't get out because you decided, I'm okay with that. So the day trade, as you guys can see, this is the day trade. Very, very simple day trade. We do this all the time in the day trading group. The swing trade is the bigger one. So the swing trade is more like, this is the swing trade. Okay? Cool. So now you put the math together and you look at this and you say, well, we know the day traders are going to get out here, and we know the swing traders are going to get out here, and there's confluence, right? Okay. That's the conservative weekly target, and it's the conservative daily target. They're two different numbers, but they overlap. So there's a high probability of someone's going to take profit. In fact, two different people are likely to take profit. So now your big decision is, will the swing traders go for the R2? If you think so, and that, in my opinion, that's a fundamental decision, then your general attack is like this. Okay? I want to add a little more information to this because I don't think I have the right price. There's two prices I want to pay attention to. This price and then this price, but I got to figure out the price in the future. So let's try to calculate the slope. And where are we going to catch this? Meaning, how quickly, what's the velocity of the fall? So right now, let's say it goes here. And let's say we're right. It goes up a little bit. Okay, let's say it tops and then drops. So we're guessing on the time. And then tomorrow we catch the bid from 99.50 and we gather the strength to break through 100 and head up a little further. I don't know if that's right, but what do you guys think of the thought process? Well, yeah. Well, look, it makes sense because, I'm your coach and I explain it and I articulate it. And you're like, yeah. Well, I'm not going to say something that doesn't make sense, right? So more like, how about this? Are you thinking in a similar way? Are you thinking about today and tomorrow and the slope and the plan A and the plan B and are you looking at the combining the daily and the weekly targets? Yeah. Good. Very good. Very good. Right. So to me, it's not a signal. I'm trying to explain the process. And you can see I've already put a target here like a week and a half ago. Like, once again, I will say to those that are now interested, I've made 200 pips already, and now you're interested. Do you understand, like, what is likely to happen? Or how about this? The cliche. The cliche is amateurs wake up and they've seen this move, so they want to buy. Who's going to sell it to them? Me. And I pick up 200 pips and I sold it to somebody. Well, what they did is they transferred their money to me. Now, maybe they're right and it goes up another 2 pips. Well, or 200 pips. Good for them. I'm indifferent. I don't really care. I got mine. You go get yours, right? But we know there's a higher probability than ever that it doesn't immediately go up 200 pips. And for someone that buys it here and then puts, a 20 pip stop? Okay. Did you know, what's the number? 85% of stops are within 30 pips. So if you have a 50 pip stop, right, it's like you're not likely to get hit. If you had a 100 pip stop, you're like, dude, insanity. You would have all the reason in the world for technical analysis to reverse before you actually got stopped out. If you had a 100 pip stop and you're on a 15-minute chart, let's say, you're going to get out because of technical analysis, not because you lost 100 pips. Where most people just get knocked out because they didn't even survive, some price action or volatility. Vol takes you out for a negative 18. I mean, like this is where people go wrong. Okay. They're buying high after the fact, jamming their stop tight. There's going to be a 90% chance they get stopped out, even if they're right. Okay, so just all these mistakes. Okay, all these mistakes. Yeah. Okay, so you don't want to behave that way. Look where I bought. Like, let me move this up so it's pretty clear. I mean, that's not a dumb trade, right? I'm not saying it's a perfect trade. No. I don't even know if there is such a thing. But there was a higher high, higher low. Okay. What is the bottom here. A monthly swing. And now we're at the monthly target. I could take profit and have fulfilled a trading pattern perfectly. Or nearly, or not perfect, but a reliable pattern. Right? The pattern's dead now, isn't it? I'm thinking more about, I'll buy it again here. And so now I don't know what the future will bring, but if you're going to do technical analysis, it tells you there's a high probability of something like this now, right? So I could give this trade to someone else. How do I do that? I sell it to somebody else. Would you like to buy me out of this position? I'll give it to you. You can have it. I don't like it anymore. Like, I'm not selling it because it goes down. I'm selling it because it went up, and I want to give the position to somebody else. Here, you take it. By the way, give me my 200 pips. Cool. And then if it falls, they get stopped out and all that kind of stuff. And it falls. It's not that people are selling. They just get stopped out. And then they're like, oh, God, can you take this from me? I'm like, yeah, I'll give you 97 for it. And we do it again here, and I buy it back. I'm thinking about next week. I'm thinking about next month. And that's what I'm trying to train. I'm not so interested in a 15-minute chart move. Okay? My thought process now is, do I take my 200 pips and run? Yeah, probably. And then I'll buy it back. I'll buy it back next week. Why? Well, the Bank of Japan told me. Right? Thank you, Ueda. Thank you. Okay? Yeah, Aussie, and that's a great point, Eskimo. Like, Aussie isn't even the best asset. Just shows you when you do good technical analysis, well, let's just say it's an important part of your trading. Right? I think TradeRs is going to become a virtual coach. I mean, seriously. TradeRs is really interesting in teaching you how to analyze properly, and sometimes in different ways, different generally accepted techniques. There's nothing proprietary. It's just really basic, reliable patterns over and over and over again on multiple time frames. It's really good to show you how to do it, especially if you see a trade plan that TradeRs AI makes, and it shows it to you, and then you go to your charts and you replicate it, plus you add your own technical analysis. You look at it, and you're like, oh, that's cool. I like how it did that. If you use it right, it'll be a virtual coach, virtual trainer. Yeah, it's, Okay. How many people here learned how to trade a head and shoulders pattern either by a guru or you learned it in a book? Co. Okay. A book, a guru. Anybody? How many people learned how to trade a head and shoulders pattern? From a guru, a book, obviously a training course. Yeah. So when you learned, like, okay, let's do another one. How about a flag pattern? Now, some of you I've already done this for you, so you're going to know, but still, be truthful, even if you already know what I'm going to do next. How many people here learned how to do a flag pattern? And a flag pattern looks like, I'm going to have to change this. Let's do template blank. Where's my blank? There we go. All right, so a flag pattern is when it goes like up, and then it makes a higher low, then it makes a lower high, then it makes a higher low, lower high, higher low, until some point. And then your book, your training course, your guru has taught you, depending on various aspects of this pattern, it's going to go up or down. It's a flag, it's kind of a pennant, there's slight variations, but you were taught this, right? Oh, Brenda, there's no app, there's no download. You just log in. Okay, so let me show you what your guru or your book or your training course didn't even know. So most gurus and most training courses are based on other gurus and other training courses. And those gurus made training courses based on older gurus and older training courses going back to the beginning of time. They teach you a head and shoulders pattern or a pennant pattern or a flag pattern or a channel break. They teach you based on what they were taught. But what they didn't say is, if you looked at it 1,000 times, how often did it actually work? They're like, well, I don't know. This is a flag pattern. The existing trend, you always bet on your trend. So you're supposed to, you're supposed to buy on the break of the apex. This is what you'll learn, right? Oh, a flag pattern. Higher low, lower high, higher low, lower high, higher low, lower high. Once it gets to the apex, you trade in the direction of the trend. Okay, cool. I get it. I know it. I've seen it. I've seen gurus do this at conferences 20 years ago. Okay? But on some of these patterns, I wasn't very good. Honestly. So I don't use patterns like that very often. What do I like? I like head and shoulders. I like double tops. How many people can do that? How many people can confirm that? Out of patterns, I like head and shoulders. I like doubles and triple tops. But other than that, I don't really get into patterns that much. I like support and resistance. And sometimes I laugh too, right? Sometimes I laugh and I say, well, that's the 3 pregnant nun pattern. But I don't really do Gartleys. I don't really do, I don't like pennants and flags and stuff. And just, so I'm very horizontal, right? And I'm very simple. And head and shoulders and triple tops. And someone mentioned hammocks, which is just a funny way for me to teach the properties of, to me, they're all the same pattern. Right? To me, there's no difference between a triple top, a head and shoulders, a crown, a hammock. They're all the same thing. All the same thing. Whatever. And that's how much I dumb it down. Well, I'll show you the transparency and the realities, the reality, okay, of traders. Okay? We're going to look at Forex patterns. And I will tell you, let's start with the flag. Okay? 689 times it's been seen. 486 times It worked. Head and Shoulders. Where's the Head and Shoulders? Head and Shoulders. 151 times it was seen, 128 times it worked. Inverse Head and Shoulders. 161 times it was seen, 146 times it would work. So these are things TradeRs is telling you. It said, hey, bro, we told you this. Pennant, right? But you should know they rarely work, which is the same as, it's so similar to a flag, but there's a slight difference. Well, TradeRs recognizes the difference. Cool. And it remembers and it learns. Channel breaks tend to be pretty good and common. So combined, channels up and down, TradeRs has seen it 3,000 times, and 75% of the time, TradeRs has pointed out a pattern correctly. Because not only did it show you the pattern, which it recognized, how does it know it was correct? It keeps watching over time. What? It's not just drawing patterns. So, right, when you go to a radar, it spots the patterns forming. Okay, you see this beautiful one? A, B, C, D emerging pattern 39 minutes ago. This is what TradeRs saw. So it's watching. It's watching all of these. And there's pages of trade plans. It's beautiful. It's beautiful. These are all technical trading plans. But TradeRs is watching. And watching them and then confirming the outcome. So we got to go to Forex again. And it remembers these patterns and watches them to see if they work or not, and then records them in the backtester. It keeps watching. How do I know that? Well, I'll give you an example. We'll go to the scalper tool. We'll look at the Bank of England interest rate decision. Okay, these are all the examples of when the Bank of England paused, when the pause was expected. Then you can go on like pound dollar, and then I say highlight every time this analysis. Okay, pound dollar based on the last 12 BOE interest rate decisions in the United Kingdom, 80% chance the 4-hour trend was down. Well, how do you know that? So you go boom, and it shows you all the instances. Well, what do you know? This is its brain. This is its brain. This is what it remembers. Do you remember your 18th birthday? You probably have a little picture of it, right? So this is the Bank of England interest rate decision, hours before and hours after. In fact, days, a couple of days before, a couple of days after. A couple of days before, a couple of days after, because these are 4-hour candles, right? Am I right? Did I click on 4-hour? I think this was 4-hour. I don't know where that, 48 hours. Yeah. So anyway, so 48 hours, 2 days before and after, 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 2 days before and after. And it's calculating the slope before and after, before and after, before and after. It's recording, it remembers, it's tracking as these patterns are forming, it's tracking after it has alerted you, and then it's recording what actually happened, and it knows if it happened as expected, did it move as not expected, and then what's the reliability of that pattern on this asset for this reason, for that time. It's stunning. But your guru that taught you, or your training course that taught you, simply republished something that they were taught. And that was something that was retaught by a guru who was taught by a guru who was taught by a guru. And none of these gurus know if what they're teaching even works. They don't even know the accuracy of what they're teaching. They just believe it's true because that's what they were taught. And TradeR's just blows the opaqueness away. Full transparency. Through analysis of thousands of patterns. And break not just patterns on everything, patterns for specific asset classes, because one pattern on Forex may be different than one pattern on a stock or a stock indice or a commodity. Commodities don't necessarily trade exactly the same as Forex. So it breaks it down and says, well, how often does a Head and Shoulders work for gold or oil? And we know quantitatively, precisely, the percentage of reliability. It's not a prediction, but we know exactly how many times it worked and failed in the past. Holy schnicker-schnacker. Oh, wow. Okay? So why go back to the old way of trading? Why would you have such amazing tools now that honestly you're trading like $1 billion hedge fund? Why would you go back trading like an amateur like you did a couple of years ago? I don't understand. People are now being left behind because they don't grasp the technology. They just don't. They're not grasping it. They're like, I don't trust AI. I think AI is wrong. I don't believe in it. I don't like it. I'm scared of it. I don't want to pay $80 for it to analyze 7,500 charts in real time and give you, quantitative analytical opportunities. I don't want that for $80. You're like, dude, do you understand? Do you understand if you were $1 billion hedge fund, you'd be paying $1 million a year to get that type of information from a team of technical analysts. One person can't watch 7,500 charts. So you would need a team of analysts constantly going over these and then looking for opportunities and then presenting them to a portfolio manager. You might need 10 people, full-time staff. It's going to be $1 million a year. And now I can give that to you for $80. Look at the increase in efficiency that AI is bringing to this world. And if you're afraid you will be left behind, it's just gone. You could trade like you have $1 million staff working for you day and night, or you can go back to amateur hour. I mean, why would you choose that? I don't know. So I don't mean to talk down. I'm sorry. But it's so extraordinary that I don't know why you would choose otherwise. And it's hard. I don't know. I feel like a Democrat not understanding why you voted for Trump. Yeah. It's like, why? Why would you do that? He's a murderer. He's a liar. He's a this. He's a that. Yeah, it's just funny. Would never understand. There's nothing you could say. And can you imagine convincing, your average Republican / Trump lover, convincing them to vote for Biden? Like, could you do it? Could you convince a Trump voter to vote for Biden? Like, what would you need to say, right? Like, I don't think anything could be said, right? Like, it's impossible. It's impossible. So I'm at that situation. Like, I don't know if I can fathom why you would not want to do it. Right? It's just, but of course, I built it, right? Yeah, obviously, right? I'm the UBO, so. Anywho, I'm watching Bitcoin closely today because I got a Bitcoin and I don't know. That's the big thing for me today. Oh, we got a new report out. Oops, I just clicked. We got a new report out. It's just a webinar. Actually, maybe I'll do this webinar. Let me show you. You're, I guess, invited too. Is it logged me right into? No, okay, it's a sign-up page. Okay. The EIA, which is the Energy Information Agency, the U.S. government. I was invited to a webinar. During this webinar, we share the latest information on model improvements we're working on for the annual energy outlook. This webinar includes additional information about the 3 new National Energy Modeling System modules, as well as information about developments and other modules. Huh. Yeah, I might do that. I don't know if you guys care about that kind of stuff. I like the EIA. EIA.gov, sorry. Okay, and this is what they're talking about, updating that. Very cool. Okay, so OPEC extended their production cuts, but we also know Kazakhstan and was it Iraq? I think Iraq were cheating. They were cheating so much that the production cut didn't work at all because they actually produced more. So they were supposed to cut as a cartel. So, but Iraq and Kazakhstan cheated so much that OPEC as a group actually overproduced. That's a lot of cheating, by the way. I like to put the range on there, but I don't see that on this one. They won't let me. So inventories have gone up recently from the lows. Okay. There's a better view because I like to look at the seasonality of oil inventories. It's a nice site. I I started building a process of pulling this information directly out of their stuff. Okay, so I read the week in petroleum, but also the short-term one as well. Short-term energy outlook, I think it's called. But I haven't looked at it in a minute, as they say in America. Okay, so this is what I want to look at, this one. Crude oil, and then the gray area is the normal distribution, meaning oil typically falls in the range of this is the highest high and the lowest low over the period of 5 years, I think it is. So it gives you the normal range. And one interpretation of this data is that you look at and you say, we don't have enough oil, and oil prices tend to go up. We don't have enough, we have too much oil, prices tend to come down. Okay. One thing I taught about 15 years ago, I did research, and I wanted to know peak oil in the year. That tends to be June. When you have the most oil. So then you take that information, and what if or you can look at the lowest low, getting rid of that. Here's a low in September. Here's a low in September. So you could look and say, well, the way that this pattern works is you draw down the reserve. Okay. Then it looks like we gobble it up. So we can mark this now too. There's a short-term high in December. Here's a short-term high in December. So there's a pattern, right? And then March, we run out. And you see, so there's a reliable pattern of drawing down and building up the inventory. And so then you can overlap and say, based on the historic norms, do we have not enough or too much? And when does that change? And therefore, you can start making decisions on should you be a buyer of oil or should you not be a buyer of oil. Okay. Okay. So, right. So you put that in there and say, right, we're in this period. Oops, I want to do that in a different color. In this period, you're predicting that oil will come down, in inventory levels will come down between January and March. And then inventories are likely to start rising March to June. Why? It has to do with the refinery business. Refineries are the only purchasers of raw crude oil. So to trade oil, you need to understand the refinery business. Okay? You understand that concept? It's cool, isn't it? Okay, like for example, if we're in a period, I'll delete this. If we're in a period in which oil typically fall, oil inventories fall. But that's the norm. But let's say this year, or whatever, not real there, but let's say in our pretend year, we're in a period where oil inventories are rising, but normally they fall. When inventories are low, oil typically should be worth more because there's not much of the stuff. And when inventories are high, in particular, not just high, rising, and not just particularly rising, but higher than normal, then there's lots of this stuff. We're drowning in oil. There's nowhere to store this stuff, so they'll sell it cheap. And you're not just trading squiggly lines on a chart. Then I ask you, well, how many rigs are there? I don't know. Well, what are the production levels right now? I don't know. What's the demand like right now? I don't know. Are you tracking OPEC and non-OPEC? Are you tracking IEA, EIA, and OPEC data? No. You're not watching demand projections by ExxonMobil, Royal Dutch Shell, Chevron. You're not paying attention to their outlooks for demand, or OPEC's outlook for demand, or the EIA's outlook for demand, or the IEA's outlook for demand? No. Well, what do? I use the MACD. Oh. Huh. All right. It's just colors on a chart, my friend. I don't know. I think you could do better than that. In particular, if you want to become a full-time oil trader or energy trader, you could just trade WTI, Brent, and nat gas. You can. You could. That could be your career. That's your specialty. You could, but not if you're only using a MACD or something, and you don't know what's going on in the market if that's all you got, So that's all. I'm just trying to, wake you up. Okay? Just trying to open your mind. I want you to, in a way, if you like this stuff I'm presenting and you're not doing it, I want you to get angry. And then I want you to say, I am going to make a change. And you write down at least just one small thing you're going to add to your daily routine that would make you become the trader you want to become. And after a few weeks, maybe a couple of months, you add another thing. Just one thing. Not 10 things. It's overwhelming. You won't do it. Just one thing, even a quarter. Every 3 months, just add one little tidbit to your routine. And start to create a habit from it. And start to really look at these things and make decisions and think about them and watch the results on the chart and make the connection mentally and emotionally, like, oh, there's a connection. This is going up when it should be falling. And maybe that's why the price is changing and behaving the way it is. You see? What's happening versus what's expected. Oh, I bet you that's good information. I bet you that was an interesting time in the oil market. And by interesting time, probably filthy, stinking, rich, yellow Lambo time. Peace on earth. May the pips be with you. May our profits be above average. Have an amazing day. Swing traders, I'll see you at 4 to plan out all of next week. And then for everybody else, I'll see you at FX Street tomorrow, a.m. Peace on earth.